Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, we got a lot to talk about today. Really important stuff. Oil, very important chart to watch. Why? We're going to tell you why. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Okay, Bob. So I think we got a good podcast today because we're going to show them how oil is going to relate to the yields and how the yield curve relates to all that and why that's important for this last pump that we anticipate we're getting. So take it away.
Yeah, and we talked about this before, Phil, whenever the 10-year yield is rising, oil tends to rise and vice versa. And lo and behold, this weekend, somebody decided to throw a chart up there to help me illustrate it more effectively. But when you get a move down in oil, the 10-year yields tend to follow. And so we're seeing that also. I'm going to show a chart here in a minute. So what it's saying here is that oil is the inflation trade, inflation hedge trade. Traders here are correctly assuming economic weakness, and they're assuming from that we'll see a fall in inflation, which then signals to the bond market that they can start buying TLT and buying the 10-year because they're going to get a principal hit as the yields start to fall. And so that's why it's important. And that Phil will talk about why that helps with the market. Phil, can you do me a favor and just throw it to the third chart? Then I'll throw it back to you to talk about the yield curve. So this is a trade we put on this morning at basically $92. You can see this chart. It's effectively where you see that magenta line on the top moving over. You see that we went ahead and broke out of a cup and handle. And, based on oil falling again, it looks like the measured move on TLT is to 97. And so these are the kind of trades that, Phil, we put on in the room for people. We also just pat ourselves on the back. We saw the Bitcoin trade BITOs acting the same way, even though it's more muted because it pays a killer dividend. But we also are getting a move in BITO for the Bitcoin move, and Bitcoin looks like it's ready to break out of its resistance. But I digress. Our point is that the pump is coming. Next week is the Fed meeting. I don't think they're going to lower rates, Phil, but I think they're going to be dovish. And then I think that's just going to allow all systems go for the summertime, because once the Fed acts, I'll throw it to you. What happens?
Yeah, if the Fed is at all dovish, this market is going to go straight vertical up because this market bounces off of every Fed meeting when they're hawkish. So you can imagine. But yeah, if we look at, it's useful to look at the yield curve here, Bob. So if we flip over to that chart, the yield curve is represented in the upper half of this chart. The lower half is kind of what we're expecting to see in the stock market. We've projected, basically bars over the actual price of the S&P 500. So we have a little more up to go before things start to roll over and then we get into the teeth of a larger recession. But before any of that happens, you need to see that upper chart. You need to see that red line needs to cross over that white line, which the white line represents basically a flat yield curve before it starts to steepen and go positive. So what Bob was describing with oil rolling over and the yields following that rolling over, remember, yields drop if there's demand for bonds. There's demand for bonds as you go into a recession. Oil is usually the last thing to fall as we roll over into a recession, and it also capitulates the last too. So when we're in a recession, if we're in a bear market in 2025 and then you see oil finally puke, that probably marks the bottom of the bear market. So it's the last to roll over and that's the last to capitulate. So that makes sense that oil's going to be grinding higher here with everything else, Bitcoin, gold, stocks, and then we should see equities fall. Bitcoin may actually top out first and roll over first. It typically does do that in the cycles, then equities, and then finally oil. And then you should see the yield curve roll over. Now, why would the yield curve steepen if yields are dropping? It's because that you're going to get the front end and the long end are dropping, but the front end is going to drop faster than the long end. So there's going to be more demand. And if you think about it, if you're institutions, you just want to cover yourself through a recession. If the recession typically is 18 months, then you're looking at 12 or 24 or 36 month bonds, right? So that front end of that curve gets a lot of demand because you're locking in not only a lower face value, but you're also locking in those higher APRs. And then you're getting a double win, right? Because then stock market face value drops, stock market returns drop. So you've basically covered yourself through a recession by ditching equities, getting into the bonds. It's just, that's a textbook trade for getting out of a risk off or getting out of a risk on environment into a risk off environment. So I think they're all very relevant, and you should be watching oil week to week here now.
Look, when this yield curve goes positive, you want to go to your minimum equity exposure and you want to go to your maximum bond exposure.
Agreed.
But just remember, we're expecting the market to lift after the Fed, chop until then. We expect oil to lift by the end of the month into September, and then they both will sell off in September and October. So that's our view right now. And I think depending on what happens with the election will determine the rest of the year, or the cake is baked because economic activity is falling. Phil, you had posted a really interesting comment in the room, I think yesterday or early this morning, when you talked about the banks that are metadating their metadata on their clients' financials and are seeing across the board weakness in terms of the profitability of their customers, number one, because they're looking at their cash in, cash out. And also their loan books are increasing faster than the companies are growing, which is causing additional stress on the businesses. So I think we're on the cusp of a pretty negative environment. And I'm also noticing that before they start laying off their employees, they're cutting hours now. So companies that I know that are customer facing are shortening hours, and they're also shortening the days that they're open because they're trying to reduce their labor costs before they have to ditch somebody completely. So I think this is going to get nastier and nastier. I think this morning, there's some employment information, some economic information that was soft as well. So this thing is in motion and nothing's going to stop it now. It's going to feel really good, like opening up a bag of chips after the Fed. But by the time we get into midsummer here, everybody's going to have a pretty bad stomach ache, Phil.
Yep. Guys, let us know what you think. You think the yield curve is going to steepen by August and go positive or not? Let us know your thoughts. Guys, if you have trouble navigating these markets or need help navigating these markets, head over to tradegenius.co, check out our packages, get in the room with us, and you can hear Bob and I day to day chiming in on the various markets and our different trade ideas. Thanks for watching, guys. Thank you, Bob. We'll see you guys on the next video. Take care.
Trade Genius.